Good morning and welcome to the Mortgage Rate Forecast with Criss, your mortgage rates and news. It's May 31st. Let's get going to some charts. Here's what we have. Mortgage Backed Securities opened pretty poor today, but guess what? We're trading at that same level, right around $102.20. We're currently at 102.25 right now, and we're looking at support coming in just below us at 102 even and 101.80. Our resistance is above us at about 102.40, and here's the reports. Personal spending came out and the Case-Shiller, both better than expected, not helpful for bonds, but the core PCE, consumer confidence, PCE prices, the Chicago PMI, and personal income didn't really hit their marks, which actually helped mortgage-backed securities. So Federal Reserve and the increase of prime, that's what's really been putting a little bit of pressure on bonds despite all the good news versus bad. Plus oil had its longest run, gains in 1 month. So in 1 month, oil actually went up so well, best gains it's seen in a single month in the last 5 years. So couple things going against us, and oil and the Fed Reserve increasing prime are putting pressure on bonds. But as you can see here from the charts, we have gotten out of that downward trading channel and we are trading flat now. This is really good news for mortgage-backed securities. We never like to see those trading patterns on a downward trading channel. So at any rate, here's where we're at on the quantification. Freddie Mac reported 3.61 at 0.6 points was the average rate for last month. We're currently trading about 15 cents worse than that. So, for someone that was paying 0.6 points last month, someone to get a similar rate would probably pay, maybe around 3/4 of a point. So that's your quantification. Now, here is our forecast. Both the analysts that I follow are pretty consistent. They're really neutral on the short term and the long term. And so here's what I'm forecasting. I think mortgage-backed securities are going to be trading between 102 and 102.40 until my report comes out next Thursday. So I think we're going to see some pretty level trading. If you have a loan that's currently floating right now, you haven't locked it in, I wouldn't be super stressed. We're probably not going to see any major movement until my Thursday report. So anyway, that's it for now. What do you guys think? What do you think is going to happen with bonds? Do you think they're going to get better, get worse, or stay the same? There's only 3 choices, right? So would love to hear from you. Leave your comments down below. And hey, everything likes to be liked, so does this video. So if you don't mind, hit that like button before you go. And if it's your first time on the channel, we do updates every Tuesday and Thursday. You can subscribe to the updates by hitting at the top left the subscribe button. And if none of this made sense and you're like, I'm thinking about getting a mortgage, maybe refinancing or buying a house, and how do these bonds really impact me as a consumer? Well, if you go to the little guy scratching his head up here, this will take you to Mortgage Bonds 101 and kind of teach you the basics of why the bonds are important to understand when it's time to get a mortgage. So anyway, that's it. I will talk to you guys on Thursday. Hope you had a great weekend. Bye-bye.